You know, your results were really terrific. 23 cents a share EPS versus 17-cent estimate. Revenues 125 million versus 121 million. Volume, as you point out, very good. And yet the stock does not seem to be performing all that well, down 6.5% over the past year as of earlier today, I believe. The past week has been pretty good. What is the market not understanding, or is it endemic, not necessarily to your company and its performance, but more broadly to the payments sector or financial services in general?
Thanks for having me and having Marqeta come back again. I would say that you've got two factors. The first one is just the industry in general and the malaise you have around concerns with a broader economical downturn. And the second one is the Marqeta story has not been clean over the past year because of the changes we've done in revenue presentation, as well as renegotiating large contracts. So that's about to change because next quarter, our gross profit growth is going to come back to be in the mid-20s, and it will be a better reflection of the underlying business performance of the company. So the story will be much simpler on the Marqeta side. In addition, coming back to the economy, I think we have spoken the last 4 quarters about how resilient the U.S. consumer is. And despite all the, I'd say, macroeconomical indicators, the American consumer in general is doing fine, although they're stretched out, but they're still doing fine. So we're coming to the soft landing, even with a few bumps. And I think both conditions, the Marqeta story getting better and demonstrating gross profit growth in a profitable way, and then confidence around the U.S. consumer will propel us back.
So what I hear you say is that the stock's performance is partly endemic to the sector in which it resides, number one, and number two, that maybe there were some things you needed to clean up in the presentation of your business to the street, and you have gone about doing that. Am I clear?
You're absolutely correct.
So
yes.
let's turn to the broader question. It seems like the world is coming your way in terms of transaction management. Is cash dead?
Cash will be dead. So we're going to be the generation that's going to see the end of the banknote. We're going to be the generation that's going to see the end of the plastic card. We look at the behavior of, I'd say, the teenagers. They probably don't touch a banknote. And if I look at my kids, they actually don't even understand that the piece of plastic translates to money. It's all digital.
Boy, do I agree with that, Simon. The teenagers do not understand that plastic equates to money, man. I get their bills all the time. Go ahead. Finish your thought.
Yes, absolutely. What I was going to say is that that's phenomenal for a digital company like ours that can take payments and make a great digital product out of it. But also, it gives the consumers the ability to get great financial services in real time, and they don't have to wait a month to get underwritten. They can get phenomenal I'd say just-in-time short-term loans in a fraction of a second that can help them with their purchasing habits without going into revolving and penalizing debt.
Simon, can you speak to your market share? When I see the shares down the way that they are this year, I wonder, if people feel that others are making some inroads, or what's kind of the roadmap for that?
Yeah, it's actually the other way around. If you look at the broader economy or our sector, the volume growth, which is actually the most important indicator of the underlying business performance, which is effectively the money that's being spent on the platform that we power, our volume growth has been stable, but has been above 30% year over year, while others are the incumbents, even the large networks, are in the single-digit growth. So we are definitely picking up market share faster than everyone else. And it has, despite our growth, the growth rate has been stable. So we're very comfortable. And as you mentioned, the market is coming in our direction. And I would say that it has accelerated.
Quick final question. Is Asia ahead of the United States in terms of adopting the kinds of payment systems, electronic payments that you specialize in?
We have a lot of work to do. Let's put it this way. In the United States, yes, our European business is from a smaller base, but it's growing significantly faster than our U.S. business in terms of volume growth. And we've conducted a survey that demonstrated that the U.S. is behind, but we're catching up. And we're making great progress. And I'd say that you've got 3 to 4 trends in the United States that are helping. And we're going to see, we're going to catch up.